Regulus Therapeutics (RGLS) has just announced a definitive acquisition agreement with Novartis. Shareholders will receive $7 per share in cash, plus a potential additional $7 per share via a contingent value right CVR if the company's lead drug, farabursen, is approved for EDPKD. This deal represents a massive premium over 100% above the last close and nearly 275% above the 60-day average. The total deal value could reach $1.7 billion if all milestones are met. The transaction is slated to close in the second half of 2025, pending regulatory and shareholder approval. There are legal reviews underway to ensure fairness, but barring unforeseen issues, the stock price should now trade close to the $7 buyout price. With the CVR as a speculative kicker, for investors, the upside is mostly realized unless you want to bet on the CVR payout. Regulus is essentially an arbitrage play now, not a traditional buy. In vitro fertilization (IVF) has been on a tear, surging over 70% recently on the back of FDA designations and new strategic partnerships. The company is innovating in fertility treatments and expanding internationally, which is bulls excited about future growth. However, IVF is still a microcap with negative cash flow, unprofitable operations, and a volatile, thinly traded float. If management can deliver on operational improvements and cash burn slows, there's real upside, but the risks are significant. In the short term, momentum could push shares into the $2-3 range, but sharp pullbacks are possible if sentiment shifts. IVF is a high-risk, high-reward speculative buy best suited for traders who can stomach volatility and use strict risk controls. NVNI Group Limited (NVNI) is in a precarious position. The stock has collapsed over 90% YTD and now trades around 17 cents 21 cents, well below Nasdaq's $1 minimum and the $35 million market cap requirement. NVNI has until October 13, 2025 to regain compliance, likely requiring a reverse split if the price doesn't recover. Despite this, one analyst still has a $7.07 price target and the average recommendation is outperform, but these are based on a turnaround scenario that currently looks remote. Near term, NVNI is likely to trade sideways or lower, with a 16 cents 20 cents range probable unless a major catalyst emerges. Delisting risk is real. And this is only for ultra-speculative investors. Jeff's Brands Limited, JFBR, is showing some short-term technical strength, bouncing off recent lows with buy signals from short-term moving averages in MACD. Volume is rising, and there is a potential breakout if it can clear resistance at $1.07, with support at 80 cents. However, long-term technicals remain weak and fundamentals haven't turned around. JFBR is a technical trade for nimble traders, not a long-term buy. If it breaks above $1.07, there's room for a quick pop, but if it fails to hold 80 cents, another leg down is likely.